Hi guys! Welcome to the Tax Q&A, your go-to guide for the tax-related issues. In this video, we will talk about the estimated tax payments. One of the most common questions we get, how do I know if I have to make the estimated tax payments? And if I do, how do I know how much I have to pay? When and how? We will break down these questions in this video, so stay tuned. Estimated taxes are advance payments on income taxes that are not subject to withholding. This means you're paying taxes on income that hasn't been taxed yet. Think of it like paying your taxes throughout the year instead of in one lump sum payment. You might be thinking, isn't that what withholding from my paycheck is for? You're right. For many folks, that's enough. But if you have income that's not subject to withholding, like income from self-employment, investments, or rental properties, then estimated taxes are your responsibility. These payments are made directly to the IRS throughout the year. For income earned in 2025, payments are due on the following dates: Quarter 1 on April 15th, 2025, Quarter 2 on June 15th, 2025, Quarter 3 on September 15th, 2025, Quarter 4 on January 15th, 2026. It's important to note that failing to pay estimated taxes or paying less than you owe can result in penalties. Remember, staying on top of your estimated tax obligations is crucial for avoiding surprises and potential penalties come tax season. It's all about being proactive with your finances. You don't need to worry about estimated taxes. If you're an employee and your employer withholds taxes from your paycheck, but if you fall into one of these categories, then you might be. If you're self-employed, whether you're a freelancer, consultant, or small business owner, you're responsible for paying estimated taxes. It also includes the folks who are working for Uber and any delivery apps like DoorDash and Uber Eats. The same goes for income from investments like dividends, interest, and capital gains. If you own rental property and receive rental income, that's also income you need to consider for estimated taxes. Retirees receiving pensions or annuities that aren't subject to withholding also need to pay attention to estimated taxes. Remember, these are just a few examples. If you receive income that's not subject to withholding, you need to pay estimated taxes. Ignoring estimated taxes can lead to some unpleasant surprises come tax season. The IRS takes estimated tax payments seriously, and failing to meet your obligations can result in penalties. The most common penalty is the underpayment penalty. This penalty is calculated based on the amount of taxes you underpaid and the length of time the underpayment existed. In addition to penalties, you may also be subject to interest charges on any unpaid taxes. These penalties and interest charges can add up quickly, increasing your overall tax burden. It's important to make these estimated payments in time as per IRS guidelines. Don't let ignoring estimated taxes lead to financial stress and potential legal issues. Stay focused and meet your tax obligations on time. Calculating your estimated taxes might seem daunting, but it's not as complicated as you might think. The first step is to gather all your income information. This includes income from all sources, not just your day job. Once you have your income information, you'll need to estimate your deductions and credits. These can reduce your overall tax liability. The IRS provides the guidelines to calculate your estimated taxes. To avoid underpayment penalties, use the safe harbor rule. Option 1. Pay 100% of your previous year's total tax liability, or 110% if your AGI was over $150,000. Option 2. Pay 90% of this year's expected tax liability. Divide the total amount by 4 to get your quarterly payment amount. If you overestimate, you'll receive a refund. If you underestimate, you could face penalties. You don't need to pay estimated taxes if you expect to owe less than $1,000 in taxes after withholdings. You had no tax liability last year and you were a U.S. citizen or resident for the entire year. Your income is mostly from wages and your employer withholds enough tax. Paying your estimated taxes is easy and convenient. The IRS offers several methods for making payments. One option is to pay online through the IRS website using their Electronic Federal Tax Payment System, or EFTPS. You can also mail in your payments using a payment voucher found in Form 1040-ES. Another convenient option is to set up automatic payments from your bank account. This ensures that your payments are made on time and helps you avoid late penalties. No matter which method you choose, make sure to keep records of all your payments. Track your income and expenses. Use accounting software like QuickBooks, FreshBooks, or Excel. Set up automatic reminders. Avoid missed deadlines with calendar alerts. Adjust payments, if necessary. If income changes, adjust your payments to avoid overpaying or underpaying. This will come in handy when you file your tax return. Remember, paying your estimated taxes on time is crucial for avoiding penalties and staying on the right side of the IRS. The IRS has released its guidelines for estimated taxes in 2025, and it's important to stay informed about any changes that may affect you. One key change is the adjustment of tax brackets and standard deductions for inflation. Watch our video on how to maximize your savings in 2025 for full deductions guidelines. This means that the income thresholds for each tax bracket have increased slightly. The IRS has also made updates to the rules regarding retirement contributions and deductions. Make sure to review these changes to maximize your deductions and minimize your tax liability. Another important aspect to note is the emphasis on electronic filing and payments. The IRS encourages taxpayers to file and pay their taxes electronically for faster processing and refunds. Staying updated on these guidelines will ensure that you're in compliance with the latest IRS regulations. Let's look at a real-life example to illustrate how to calculate estimated taxes. Meet Sarah, a freelance graphic designer. In 2025, Sarah expects to earn $60,000 from her freelance work. She also earns $10,000 per year from rental income. After deducting business expenses and the standard deduction, Sarah estimates her taxable income to be $50,000. Based on the 2025 tax brackets, Sarah's estimated tax liability is around $6,000. To avoid penalties, Sarah needs to pay at least 90% of her tax liability throughout the year, which is $5,400. Sarah can make these payments quarterly, with each payment amounting to $1,350 per quarter. By making these quarterly estimated tax payments, Sarah can avoid underpayment penalties and stay on top of her tax obligations. Remember, this is just an example, and your individual tax situation may vary. Understanding estimated tax payments can save you from unexpected penalties and keep you on track financially. If you found this video helpful, don't forget to like, share, and subscribe for more tax tips and insights. Drop a comment below if you have any questions, and we'll be happy to help. See you in the next video.